All right, everybody, strap in for Tristan. This fellow was a French man living in Spain, teaching in China and Germany, letting everybody know about the world of finance, the world of business, the impact that Bitcoin will have on it. Really interesting insights into the fact that Bitcoin is going to do a lot for businesses and already is. But as soon as businesses start accepting Bitcoin from one another, you better strap in. Hang on for the ride because the utility of Bitcoin is going to go to the moon. Your silly dollar value of Bitcoin is going to go to the moon. You should pause right now, stack yourself some sats, and then start watching Tristan. Here he goes. Welcome to Sat Chats, the Bitcoin podcast where we chat about sats. Sats are the smallest part of a Bitcoin, the same way pennies are the smallest part of a dollar. With Sat Chats, we are building the world's biggest Bitcoin welcome center to serve as your gateway to generational wealth. If you're new to Bitcoin, we want to chat about sats with you. Head to satchats.com to grab your slot in the studio. I'm your host, Stuart, Bitcoin Maxi, who wears prescription sunglasses to protect you and your loved ones from my Bitcoin laser eyes.
And I'm your co-host, Chris, founder and CEO of Ithaca Hummus, proud multi-coiner, and Bitcoin smash buyer.
Smash. So smash that like and subscribe the same way Chris smash buys Bitcoin. Smash those 5 stars on Spotify. Help us talk to literally every single person on earth about sats. So today we've got Tristan here in the virtual studio. He is a blockchain entrepreneur, right? Originally a French word. Let's go. Who teaches about crypto, about the blockchain, both in China and in Germany. Tristan has a publication called Fintech Review, where he covers these topics. Really, the fellow seems like he's got a lot going on based on my perusal of his LinkedIn. So we're going to be hearing Tristan's Bitcoin story here today. But before we do, Tristan, we would love if you could let our satillionaires in the audience learn a little bit more about you.
Cool. Yeah, well, thanks for having me. As you say, I do a lot of things. I don't like to be bored, so that's why I keep busy doing many different things. So my background is in financial services, which is what brought me to the world of blockchain and cryptocurrencies. I split my time between advisory, consulting to companies in financial services and outside, typically in Europe. Sometimes I do stuff elsewhere. And then I have another part, which is academia, where I'm a visiting lecturer in China, where I teach in a Fintech focused school on the campus of Shenzhen, which is just on the other side of Hong Kong, a big tech hub in China, where I teach introduction to fintech. So I cover blockchain and AI and various different technologies that we use in financial services. And then in Germany, I teach more about innovation and strategy. And I'm doing PhD research on strategy. So that's that thing. And then, as you say, I also run Fintech Review, which I started a few years ago. I was like, why am I not putting my thoughts out there about like what I think is happening in fintech, in financial services? And I was like, oh, you know what? Why should I not start something? And here we are 5 years later. So yeah. So I'm also, like, as a disclaimer, I come at blockchain and cryptocurrencies and a lot of technologies from a business perspective. Is that I have a master's degree in management and I'm a strategy guy. So I always look at the business applications of everything, and I always look at it from a business, finance, and economics point of view rather than I understand the technology, but I will always try to understand the technology as it what does it deliver for business, for an individual.
So I think this is going to be really interesting to approach Bitcoin from a business perspective. Mm-hmm. What can Bitcoin do for business? I think before we jump into that idea, Tristan, can you help our audience understand a little bit more about when did you first discover Bitcoin, and what problem did you feel like it was solving, either for you or for the business world?
Yeah, I mean, originally, I mean, Bitcoin was thought as an alternative to cash, as a digital cash, back when the white paper was written. It has evolved into something else, but that was the original idea, which made sense. It was at the time where, post financial crisis, actually in the middle of the financial crisis, and people are thinking, well, can we really trust the banks? They've done stupid stuff with our money, so maybe we need to have something a bit more decentralized as opposed to the centralized banking system and the centralized monetary system. I actually discovered Bitcoin when I entered business school in 2011. There were starting to be a bit of noise about Bitcoin and digital currencies. It was valued at almost nothing. Sadly enough, I didn't buy tons of it at that point, but that's, you can't rewrite history. I was coming at it. I was fresh out of economics bachelor, looking at this from a very rational point of view. It made no sense. Like, especially when you have the teaching around, like, you've just learned about central banks, about the monetary system, and then someone talks about a digital currency, and you're like, well, the intrinsic value is zero, so why do you want me to buy this? So that's how I first discovered Bitcoin. And then fast forward in something like 2016, when there were a bit more noise about Bitcoin, about blockchain technology, and I was working in banking at that point, and I started working on projects around blockchain technology, so trying to see what it could do for the bank I was working at. And this is when I started looking a bit more into it. And I think for me, I look at it from, because also, as I said, I come from a finance background. I look at it as an asset class, and that as a way to diversify, like any other asset class. So if you're building a portfolio, why not? Because you're having lots of assets that do not have a value unless you say that it has a value, because that happens a lot to a lot of things in life. It's just how it is. It's not different for Bitcoin than it is for, gold has some industrial applications, but still, most of the value comes from the fact that we say, hey, it's worth that much. And most currencies, still, they're backed by governments, but they are worth what we say they're worth. And that's why some currencies are worth nothing, because people are like, yeah, this is worth nothing because the guys that are backing this currency are worth nothing. So this is how I see it. So could it go to zero? Sure, lots of things could go to zero. Like my flat could go to zero if people say this is worth nothing.
That's really interesting to think about, the societal valuation of currencies and of assets. Certainly, some things have value outside of a human's opinion. For example, water seems pretty good. And calories that we get to eat, pretty hard to argue with those being good. But you can get to a spot where somebody feels like, Beanie Babies are a collectible item that are going to hold their value for a long time. Or a sneaker, for example, Tristan, people might feel like, hey, this is really valuable. I'm going to pay more for it than I would a basic sneaker. But there is a lot of us just determining that something is valuable. And really, I think with money, a lot of people will look at gold and say, well, you can't eat it, you can't live in it. Same with Bitcoin. You can't eat it, you can't live in it. It has no value. It's like, well, it has value as money. It has value as money. And people talk about how gold, really only has jewelry as a use case, and Bitcoin really only has, a store of value as a use case. But those are use cases, aren't they? And a money is good because it has the properties of money, not because it could be eaten or lived inside or, applied to industry. So I'm curious what you feel like the business application of Bitcoin is.
Yeah, I mean, as you say, I think we've invented money. I mean, since it's not yesterday, but because we thought it's easier than if I'm a butcher and I'm not going to give you steak for your bread because you're making bread. It's probably easier if I say that my steak is worth $3 and then your bread is worth $1, and then somehow we exchange this. So money is like this. It's just a mean to exchange value. So for me, the application I see is exactly that. Is one more ways. If you're a business, it's one more ways to get paid. So technically, every business, like you're selling something, a product, a service, you want to get paid. So why not getting paid in something else? Like you have what technologies has brought us with fintech waves, that now, for instance, you're a digital business, you can accept a ton of currencies. Like before, you couldn't. Before, like the early days of e-commerce, you had to send a check by post for it to be banked before. But now you can pay online. You have dynamic currency conversion. You can pay with whatever currencies you want. So why not getting paid in another currency, in cryptocurrency? What the only thing for you is being able, as a business, being able to price your service at the exact right price that is at that currency. So you need this dynamic conversion, and then for you to be able to use it as well as a business, or either store it or use it to pay for stuff. Because as a business, you get some revenues, you need to pay your costs. But as long as these revenues that you get in whatever currency, you can use them to do other things, to pay your employees, to pay your providers, then it doesn't matter that you get paid in pesos or in Bitcoin or whatever. That's how I see it. Is that like a currency is just a way to exchange. It has a certain value, as long as you're okay that it can fluctuate as a business, that it might fluctuate more than another currency, than the US dollars and the euro, then why not? And it actually also makes a lot of sense if you're doing business in countries where the currency might actually devaluate a lot, because we often look at it from I look at it from Spain. We have the euro, super stable. The US dollar, super stable. You're in Argentina, you're in Zimbabwe, you might actually want to accept in a currency that is stable. US dollar, euro, why not Bitcoin? It's more stable. It's going to be more stable than whatever alternative. So that makes sense as a business.
So let me ask you about that real quick, because we got some comments online. Now that we have been putting ourselves out there in the name of Bitcoin, we're starting to attract YouTube commentary trashing Bitcoin. And one fellow said that he commented on a video that Bitcoin was not stable and that it was not a store of value. But, here you are claiming that Bitcoin is going to be more stable than some of these other currencies that are, potentially being printed, into infinity, right? So why do you feel like Bitcoin is going to either is stable or will become stable despite, daily ups and downs or, the volatility of people trading it?
Yeah, I think that there are two different concepts here. Is that there is a volatility that is, that's a fact, and then there is a value. So if you look at, even if you were to invest money in the S&P 500. You would have volatility, and it would, it can lose 50% this year. However, the value over time will go up. That's, like statistically. So there is a difference here, which is looking at the long-term value of something and the volatility that you might have during that time period. And if you compare, for instance, you take 5 years and you take Bitcoin and you take the Argentinian peso, well, I can tell you for a fact that actually over time, Bitcoin has increased in value. It was more stable if you look at the on a year, on 2 years, on 5 years than the peso. The peso has been going down in the same period. The thing is, you might have something that doesn't have a lot of that volatility, but loses value, whereas you have something else that has a lot of volatility, but increases in value over time. So it depends in finance, usually. It depends a lot on what's your time horizon. Are you looking at cashing out, in a year, cashing out in a day, cashing out in 10 years? And then depending on that, you put your money in different places. If you need that money in the very short term, then you should maybe keep it in cash if you don't want to lose value. If you're looking at longer term, then at that point you might look at things that are more volatile, but that will increase in value. So it all depends on when will you need this, when will you need to convert this asset or whatever into cash to use for something else. Or maybe actually you will never convert this because you will just use that asset, that is Bitcoin or US dollars, to do other things.
What kind of time horizon do you think a business should have for putting Bitcoin on its balance sheet? Does a business need to be willing to set aside some Bitcoin for a whole year? Or is it okay for a business to say, you know what, I bet I could store my spare cash in Bitcoin because I don't need it for like 3 months, and that would be okay? What kind of, what's the tipping point between keeping your business operating cash in cash and storing your business operating cash in Bitcoin?
So I think it will depend on some business are more cash generating and will generally sit on a lot of cash, as opposed to others that might need more. Usually it's a factor of how long a business has been around. Sometimes they have like lots of cash because they've been around for a long time, or there are some businesses that just structurally have a lot of cash because, for instance, if their customers pay them before they pay their suppliers, a supermarket, for instance, you will pay for your product before they even pay for the providers for that product. So structurally, they're sitting on a lot of cash. So I think it will depend on the nature of the business. And then, I don't know, like 3 months might be a bit short term in terms of fluctuation, but it all depends as well. Will you need the cash or not? I would say it's probably more, if you look at the balance sheet, more on the side of the long-term investments that a company might have. And they might put their money in lots of stuff. At that point, I think it might make sense. But if it's really the cash on hand, and if it's very short term and in 2 weeks I need to convert it to pay all my providers, you might not like the fluctuation because, I don't know, something comes up and then it loses a lot of value. You might put a bit of financial pressure on the business. But beyond that, I could see it because, as I said, it fluctuates, but over time, the line is there if you take a bit of a midterm, long-term view on this.
So just to go back to something you said earlier that I thought was interesting, when I read Safedean's The Bitcoin Standard, I learned a lot about what money is and what makes for a good money. And I would argue that gold and Bitcoin contain properties that make them good money, above and beyond humanity's perception of them as good money. But with the currencies that are issued by countries, with that government money, so to speak, you really do value it based on your perception of that country's abilities. And to your point, that's why the euro is strong and stable. It's why the US dollar is strong and stable. It's why the Argentine peso is just horrible. And, you know, certain currencies of different African countries that are having a hard time getting along with one another. Nobody wants that money. It's just interesting to think about how you're determining the value of those currencies based on those local conditions, right? The local conditions of that country, their stability, their productivity, their progress. It's confined to those borders. But with Bitcoin, as a global money, the whole world gets to decide what Bitcoin is worth. And the people who get to decide what Bitcoin is worth are the people who use Bitcoin.
Yeah. Yeah, no, definitely. I mean, if you look at how many currencies are out there, and how many currencies are actually stable, and have value, like basically people are willing to be paid in these currencies. Actually, it's not that many. Is that you would have hundreds of currencies, but actually, once you've excluded the euro, the US dollar, the British pound, maybe Australian dollar, yen. I mean, basically, it's not even 10. And the rest will fluctuate a lot based on their conversion to the US dollar or the euro. And it's down to how strong the economy of that, or that is backing that currency, and are their ability to pay back their debts, and their ability to be fiscally responsible, even though you could argue that the US dollar or the euro behind it, is it really fiscally responsible? Not sure. It's printing a lot of money to fix the deficits. That's what it's doing. But as you say, I think the only true global currency is the US dollar, where the value will, like, a lot of people actually define the value because they use it for global commerce between countries are actually not the US. So you might have two countries, like one in Middle East, one in Asia, and they will deal with each other in US dollar, even though they have nothing to do. But just because they know it's a means of exchange, it's stable, they understand the value. So the experiment with digital currencies, as you say, is that you take that central bank, that government out of the equation, and you try to bring it back to the essence of it, which is, I'm saying this is worth 1. You're telling me it's worth 2. Okay, let's meet in the middle. It's worth 1.5. And this is the true thing for me. Money becomes useful if you can use it. Basically, that's down to this: is that if I trust the value, you trust the value, you trust the system. So with Bitcoin, actually, the trust is not in the government that is backing it. It's on the mechanism. Everybody's trusting that the mechanism is correct, that it works. And now it's been quite a few years and we see it works. And you trust, the trust is in the system. So there's still a part of trust. It's not trustless. We always say, hey, you don't need trust in cryptocurrencies. Well, actually, yes, you trust that it works, that there's not a bug, and suddenly all your money goes away. Or so this is what you're trusting. But it's quite interesting because it's bringing it back to, for me, to we take a step back to, okay, what is actually money, which is, I'm saying that this is where we all agree collectively this is worth something, and it's just because we all agree this. There is no one that is interacting with it, printing more, or deciding to cut rates, to cut the supply, or whatever. This is totally different.
I love how this episode feels like it's anchored in this idea of international medium of exchange, right? And how Bitcoin presents some advantages to the alternatives that are available to us. And I've seen examples of this in my industry with manufacturers buying and trading raw materials across borders. And some of the problems that they face without Bitcoin are, number one, if they want an instantaneous transaction that limits their exposure to fluctuating currency exchange rates, they've got to pay some kind of central bank a percentage of the transaction in exchange for the speed of the transaction, right? Or they could choose to transact using an ACH or a wire transfer, but on an international scale, that also comes with a fee. But the bigger problem is that you may be talking about 5 to 10 business days before the money actually clears. So we could agree on a price in US dollars to RMB in China, let's just say, at the point of purchase, and then by the time the money actually reaches you, those two exchange rates have changed, and it really messes with the value of the transaction. So I get that Bitcoin solves that problem because it's a low cost medium of exchange across borders, and it's basically instantaneous, right? I mean, within minutes, you can have this transaction settled. But the problem that you still have with Bitcoin today, at least, and this just might be a function of where we are at in the adoption curve, is that if I'm a company, that means I've got to buy Bitcoin and hold them so that I can participate in Bitcoin transactions. And my raw material supplier has to accept Bitcoin and be willing to hold them after they've accepted them. So you're still stuck with that same volatility problem on either side of the transaction. Does that make sense?
Yeah, yeah. As you say, I think you are solving with actually blockchain technology and cryptocurrencies. One of the good use cases, what you say, is trade finance and supply chain finance, because at the moment it's very complex, lots of intermediaries, clearing houses, what you mentioned, and then it takes forever and it's very costly. Of course, we don't see it, between country, but sometimes it can be, very complex and very lengthy. And the the challenge, as you say, is okay. Well, I'm getting paid in Bitcoin. Can I do anything with it, or do I need to convert it straight away? So then it becomes more use. The more you can use it, the better. In the sense, if I get paid in Bitcoin, I can pay my employees in Bitcoin because they accept it. Suddenly, I have a use for that pot of money. I don't need to convert it. So if I am able to get revenues in Bitcoin and then pay my suppliers, pay my employees, then it becomes much more valuable. So at the moment where we are at the stage where some businesses would accept to be paid in Bitcoin, but so long as there are not more businesses that accept it as a form of payment, we'll reach a moment where, if, for instance, I get paid in Bitcoin, I can pay my Slack and my Microsoft and all my stuff in Bitcoin, then fine. But at the moment, what would happen? Someone would pay me in Bitcoin, but then I turn to my suppliers, and I have tons, but they're small amounts, but I have tons. I would turn to them and I say, "Hey, can I pay in Bitcoin?" They will tell me no. So they will say, "No, you need to pay us in US dollars." I will be okay, fine. So I need to convert it. It brings back to the point of, yeah, well, if I have to convert it, why not being paid in US dollar first? So this is for me the trick is the usage. Is that, can you do something with it? We're slowly getting there. More e-commerce platforms are accepting payments in cryptocurrencies. But it's, for me, will be the turning point. Is that if as a business you can really use it, and then at this point, well, nothing will stop it because you get paid in it, you can use it, and then it's exactly like any currency. I deal mostly, in my business with three currencies: US dollar, euro, and pounds. Um, but it's just because of where my clients are. But if suddenly they say, "Hey, Tristan, we want to pay you exclusively in Bitcoin," my first thing will be like, "Okay, fine, but what can I do? What can I pay my suppliers? I can pay myself, sure, but I can pay my suppliers." And for now, it's not the case.
Mm-hmm. I think the other big variable is back to what you said about time preference, and in a way, it's almost like the businesses that are more efficient with capital and for whatever reason, maybe it's just a better business, they have more cash on their balance sheet, they're more profitable, they can afford to have a longer time preference. So I could see a situation where I'm willing to accept Bitcoin and then just hold that Bitcoin as a business because I know that Bitcoin's always going to go up. It's programmed to go up. And it might not be today or 3 months or 6 months from now that I convert that to see those gains. It might be a year from now. But if I'm in that, if I've positioned my company to have that kind of time preference, that solves the problem.
Yeah, exactly. If you calculate that you have a net profit margin of 30%, and you're like, you know what, I can be paid up to 30% in Bitcoin, and that will be my profit, which I will keep it long term. And then, so you can make some calculation based on how much how much you're saving as a business for the long term. And if you're able to generate cash and generate profits, and then you're like, okay, fine, I'll put it aside. This is besides what I said around, if you're a business that generates, has positive cash flow all the time, then if you have always positive cash flow, that is, you can set aside a part of it because you know that, oh, I'm always positive of 500K no matter what. And you're like, okay, fine. Well, why don't I set aside 100K in Bitcoin? Because anyway, I don't need to tap in this because I'm always, 500K. Then it becomes different if you are a business that fluctuates between periods where you're going to dip in your cash and periods where you're actually generating more. So the nature of the business, I think, will play a big role in how much you're able to invest in Bitcoin and put aside in cryptocurrencies.
Good. Major advantage.
Wow. Okay.
Major advantage.
So let me see, since I've got a multinational, incredibly smart fellow with the various degrees. I think you talked about having some PhD work, and I've got a dadgum founder and CEO of a business over here. I'm literally just a schmuck. Let me see if I can understand this. What you're saying here, Tristan, is that if I had a business and I generated a profit, the idea there is I've generated enough money to cover my company's expenses, to pay my suppliers, to pay my employees, and then the money I've got left over is my profit, to where theoretically, if I'm going to produce the same amount of money next month, it's okay for me to sock away this month's profit because I might not need it to cover next month's expenses. If you're a business owner out there listening to the show today, you could conceive of taking your profits and storing them into Bitcoin for later.
Yeah.
Yeah, basically that's that. And then you have another dynamic, which is a side of the profit, which is the cash flow that you're generating as a business. But then the profit is a good example because it's actually money that you've generated. Most businesses, what do you do with a profit? You pay yourself a dividend or your shareholders, or you keep it for your company for longer term investments. At that point, this is a good use case for where are you going to put the money? Are you going to invest in some bonds? Are you going to buy something, some investments? Or you can store it into cryptocurrencies because the time horizon will be longer term. So that matches the profile of cryptocurrencies.
Wow. Okay. That's pretty interesting for me to learn about, is this concept of businesses finding ways to invest in Bitcoin. I know that's happening quite a bit last year with MicroStrategy, Similar Scientific, and others. Last question for me, Tristan, before we jump into making you an offer here in exchange for your time. You think about Bitcoin in terms of its business application, and we've talked about how businesses could accept Bitcoin under specific conditions, but we do need to reach more levels of adoption in order for these companies to feel more confident about accepting Bitcoin, because they'll be able to go get things they need for that same Bitcoin instead of having to try to convert it into a different type of money. When you think about the future, what do you feel when you think about Bitcoin and the future of business? What are your thoughts? What are your predictions? What are your feelings about what it's likely that we're going to see next?
For me, a lot of the time in financial services, the change comes from the users, from the customers, which was the case. I mean, if you look after the financial crisis, a lot of new businesses popped up, and people were like, okay, now I'm going to use something different from my bank. Even though banks have stickiness, it's crazy. People stay with their banks until, like, from the moment they're a student until they die. It's a bit nuts. And you're like, change banks, and they're like, no, never. It's my bank. So we've seen this changing, even though slow, but changing. So people using neobanks, people using alternative lenders, and all that stuff. And this change came from the users, from the customers. So I think that my prediction is that the more people will have Bitcoin and will want to use them, not just store them, but say, hey, why can't I pay with it? The more it will create an opportunity for businesses to say, maybe I'm losing that sale because actually people wanted to pay with something else. And that will push the payment providers, the PayPal and Co., to make this available as a way to pay or in store, because their own customers will say, hey, well, actually, I want to be able to be paid in Bitcoin because my customers are asking to pay in that currency. So this, for me, will come, as I said, the dynamic for me comes from a customer that says, hey, I want to be able to pay with this. Then the businesses will feel the pressure to allow this to happen. If you look at all the big asset managers that went into Bitcoin, like BlackRock and stuff, why? Because there's a business opportunity. They're like, oh, actually, there's money to be made. So as soon as the businesses will feel the pressure from their customers that there is money to be made, they will make it so that you can pay with it, and then this will create a dynamic where it's more used. And I think with the cycle that we are in, more people investing into Bitcoin, Bitcoin going up, so you have more adoption. This will create more people with money to be spent instead of just looking at it. And then at that point, this will push businesses to accept being paid in Bitcoin. So that's my prediction, that at some point there will be such a mass of like people wanting to use it, not just having it here and not wanting to convert it, because at the moment this is what you're forced to eventually convert it. But when you reach the point where you don't have to convert it, you can use it to pay directly. This will be a big game changer. This will be like the tipping point where you go from it is an asset, volatile or whatever, to this is also a currency. You go back to Satoshi's idea. This is digital cash. You can actually use it to pay for stuff. And for now, we're not there yet. We're not there where it's a super good digital cash. But I see trends where payment providers start to offer it, and not just a niche one. There are a few that are starting to look at it and starting to see that it is a business opportunity. Why would I lose, even if it's only 5% of the customers that want to pay like this? It means friction. These customers might not buy, and then you lose customers. So from a business perspective, for me, this will be the game changer.
I like that. And Tristan, we ask each of our guests if they would come back on the show in 9 months to give us an update on their Bitcoin baby. We would love for you to be our business expert who in 9 months can come back on the show and help our Satillionaires get an update on the impact of Bitcoin on businesses. You know, have we seen any major companies accept it as payment? I think that would be pretty insightful and useful. Would you do that for us?
Yeah, sure.
All right, so let's recap our conversation then. We've got Tristan here. He is an international man of academia, finance, entrepreneurialism, covering the world of fintech through his publication Fintech Review, lecturing in China and Germany. He's loving plans and lists. The man likes plans and lists. He's got 7 bullet points to knock out after this podcast is over, and he's all fired up about it. We learned that Tristan comes from a background of finance and the financial industry, spent some time in London doing some banking of some type there, and you kind of found Bitcoin through your time immersed in the financial world. And the way that Tristan thinks is always in terms of how does this apply to business? What can this do for the world's commerce and economy? And what we really focused on today was this concept of Bitcoin as an excellent tool for settling international transactions. We might not yet be at the point where we can buy our coffee with sats, but we are certainly at the point where businesses that are routinely interacting with one another around the world could use Bitcoin to make those transactions easier, to preserve the cost of what they're selling and the price that they bought it at.
Not could use, are using right now. Happening.
Already happening.
Big time. Yes.
Okay. So I like that. So it's already happening.
Yeah, and I'm sorry to interrupt you because I love these recaps that you do. I'm always intently listening, but I think that's important for our audience to understand. This is happening today in a major way. I mean, it's not like maybe it's happening.
Yeah, that's crazy. Okay, I mean, I would love to. So maybe if you're listening and you know which like major companies are buying and selling in Bitcoin, put it in the comments for us.
If you know of one, just if you know of any, like I'm trying to learn too.
And I'm going to make a guess. I'm going to say it's Maersk, the giant shipping company. That's you always see those Maersk, and I'm probably not even saying that right. So go USA, but y'all know it's that big shipping company. We want to know, okay? So. That type of international transaction, can't nobody tell me that Bitcoin isn't the best way to transact internationally. And we heard that with number 20, Andy, as well, who buys supplies from China. He has to go through a lot of hoops, a lot of banks, a lot of value-added taxes or tariffs, or even in some cases, just full-on corruption to get his money to his suppliers. So really interesting to hear the business perspective on Bitcoin from Tristan today. And he's going to come back in 9 months and help us learn even more and measure worldwide adoption. And I think it was interesting too. One last thing I'll say is, Bitcoin in the early days was electronic peer-to-peer cash. Individuals were transacting one-to-one and having a lot of fun with it. And then we moved into the phase where we are now, where it's more like digital gold than digital cash. But over time, I think we'll go all the way back around to Bitcoin being digital cash again.
No, it still is. It still is.
It still is.
I hate when people say that.
Yeah.
It is digital cash.
Yeah.
It is digital gold. It's just what we're talking about when we say it is and isn't is how people are predominantly using it now.
Yeah.
But it is digital cash.
Yeah. Yeah.
The best.
And my dad's always like, you guys are so defensive about Bitcoin as digital cash. You can't buy anything with it. You guys should just go ahead and say you can't buy anything with it and that it's just digital gold. And that maybe late in the future it'll be digital cash. But you know what, Dad? You're wrong, Dad.
Wrong.
You're wrong. It is digital cash. It is digital gold. It's the digital unit. It's so many things that we can't even fully describe it accurately. And that's what makes Bitcoin so great. So we loved our time with Tristan today.
Yeah.
We're going to make you an offer here in a minute, but I'm very excited to try out classic Ithaca hummus. So in your intake form, Tristan, you said you'd like to try the classic Ithaca hummus flavor. And we don't have a way to teleport this tub of Ithaca hummus to you over there in Valencia. But we're gonna try it. I'm gonna try it on your behalf here, Tristan.
Go for it.
I don't know if this hummus has ever appeared on the show.
I don't think it has.
Nobody chooses classic. What made you decide to choose classic?
I used to live in Middle East, so I was like, I like a classic one.
There we go. Okay. A lot of people, they get distracted by the flavors, but I am a classic Ithaca hummus man. I can't wait to crunch into this fat glob for Tristan. Here we go.
Oh, yeah.
Immediately, my mouth is full of flavor. What am I tasting?
Well, like in all of our flavors, we have cold pressed, fresh squeezed lemon juice. Mm-hmm. So they all have that nice, bright, acidic kick to them. Mm-hmm. Obviously, there's a little bit of tahini. We put about 20% of this formula is tahini. All of our hummus has less tahini than most other store-bought hummus. Okay. That's because that's how I like it. I mean,
yeah. I mean, my experience with hummus, like original flavor hummus before this, was that it was like paste. It was like goop. Yeah. You know what I mean? Mm-hmm. It just felt like nutritional paste. But I tried this classic Ithaca hummus and my mouth immediately exploded with some kind of flavor. And it must be that lemon or it's something. But I love it. It's my favorite flavor. Cool. So let's move into making your offer here, Tristan.
All right, Tristan. So here at Sat Chats, we believe in exchanging value for value. And so as a small token of our appreciation for you coming and spending time with us and with our audience, we'd like to offer you your choice between $50, 50 USD right here, which what would international postage be? That'd be so this would actually get
$50.
Yeah, right. I mean, it won't be $50 by the time it gets to you. That's for sure. No matter how I sent it there, and it would take time and all that other stuff that we talked about.
And
today.
It would lose value on its way because
it was inflation.
Yeah, my government would be printing so many of these between the time when it left and got to you.
All right, so that's option one. Option two would be $50 worth of sats. Okay, so I've got the Clark Moody Bitcoin dashboard up behind me here, and I love this dashboard right here. We can see that one Bitcoin is the equivalent of $84,550 right now, which converts to 1,183 sats per dollar. So 1183 times 50. I'm getting good at that.
Oh, yeah.
Is 59,150 sats. Ooh. Or 50 of
50 of whatever that is.
So I'm gonna take the sets.
Yes. Yes, Tristan.
I would have even preferred if it was $50 equivalent of the Bitcoin back in 2010. Would have been even greater, but it's fine.
We don't even have enough operating capital to do that one time for our guests. But I do hope that, years from now, they'll look back and say, those guys were dropping almost 60,000 sats per episode on their guests. And we will come to learn that we were like basically paying out $50,000 to $60,000 twice a day.
Hemorrhaging.
They're going to be like, these guys are absolute maniacs. You know what I mean? Like, I really hope that's what happens.
That's fine.
So, Tristan, is there anywhere that you would like our Satillionaires to go to engage with you or follow along in your journey?
I'm quite active on LinkedIn, talking about strategy, talking about various things. But then on the fintech side, on Fintech Review, is where things happen, through my newsletter and through the articles that I publish. So I recommend engaging, sending a message, love to chat with people from all over the place. So happy to do that.
Okay. So head to LinkedIn. We'll have a link in our show notes for everybody to find you there, send some connection requests. If you've made it this far in the show, our producer, Jeremy, wants you to comment down below. He wants you to say the word bonzo, Bitcoin laser eyes in the comment section.
That's too long. Hashtag bonzo.
Hashtag bonzo in the comment section. Let us know who the true Satillionaires are out there listening to this whole daggum thing. Hit us with a like, hit us with a subscribe, share this with your friends and family. We want to reach Bitcoin beginners. We want to chat about sats with everyone. Help us spread that signal and get to 999 plus one subscribers on YouTube. That way we will unlock a live show for you Friday mornings at 10 a.m. Eastern. Tristan is going to be in the chat. It's going to be 3 o'clock in the afternoon in Valencia on a Friday. He's going to be bubbling up the paella. He's going to have a little bit of Cruz Campo. He's going to be relaxing in the chat, hitting us with the massive business analysis and insights. And let us know if you're excited for him to come back in 9 months to keep us updated on this really, really cool business financial world. So remember, Sat Chats is for educational purposes only and should not be construed as financial advice. Also, our guests' views are their own. See you on the next one.